Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar once again finds itself treading water on Friday and was reluctant in taking the challenge up to 74 cents after posting an intraday high of 73.89, and then from there followed a modest retreat. Meanwhile, this week we've got quite a busy economic calendar with the key events looking towards Australian June's quarter CPI and also PPI. Along with that, we have the centerpiece for the week, which looks to the US Federal Open Market Committee, or the FOMC, two-day policy meeting that begins on Tuesday. It is widely expected on the announcement on Wednesday or early Thursday in Australia time. No policy changes are expected from the Fed, and no doubt all eyes will be on Fed Chairman Jerome Powell when he holds his press conference following the meeting. So looking at the pattern, if we see a close on the Australian dollar under 73.25, this would negate the bullish outside range day and therefore reinstate the target that is of 72.85 and reassess. I'm not going to get overly bearish on this market because we saw a good rejection from that lower side of that range and we could once again see it again. With the RSI also backing away, or more to the point, buckling underneath the pressure as it fails to take on the challenge to the midway point, instead easing back towards the closer side of the oversold range. And the MACD is also holding a weak negative signal, could see further pressure. But as I mentioned, we need to see a New York close under 73.25 to reinstate the downside to 72.85. Otherwise, all eyes will still remain on that 73.80 level that needs to be closed above to confirm the bullish outside range day to a target of 74.45.60. But at this stage, it looks very, very thin. A relatively quiet session for the US dollar, which measures the greenback strength against a basket of six major currencies, and with the euro weighted at 57.6, still remains in this declining wedge or falling wedge. It is, in terms of this pattern, as bullish, and keep an eye on this RSI, because if it pops through that midway point, the MACD holds a weak positive signal, could see a short-term impulse again, like previously, up to 118.25 and reassess. I feel that the bullish pattern isn't likely to get much beyond there. The reason behind that is the fact that the US dollar is still, on a broader sense, relatively bullish and therefore could still see risk to the downside. These patterns are relatively bullish, but they can sometimes give a false call or signal and actually end lower. So just be on your guard. But I like the way this pattern's shaping up, and we could see a short-term impulse, could give opportunity to shorten the market. On Friday, the market was a little bit, again, apprehensive or hesitant towards the challenge of 110.7080. And from the back end, the market is breaking down somewhat. But keep an eye on these technicals, not fully confirmed, but they are buckling underneath the bearish pressure and therefore could see a return if we see a further weaker play towards the low 109 region this week. Sterling, once again, is a little bit hesitant towards that top side range around 137.70.90. And from that, the market is backing away somewhat quite quickly. But still holding positive signals from the RSI and also from the MACD. So I'm not giving up or throwing the towel in as of yet, as we may see one more test to that upside. If we can clear 137.90, then that would put on the horizon at 138.65. That would mean sterling yen can actually continue on its bullish run. At the present, it's stopped around this 152 figure 10 level, but if it can see that sterling leg strengthen, then we could see a rise up to 152.80 and reassess. Once again, gold remains in a lackluster price action, or more to the point, limitless. And due to the fact that the resistance at 1,813.16 is still capping the market, the technicals are still trying to break higher. As you can see, the RSI has pierced the 50 midway point. Unless we can clear 16, that would give further guidance up towards 24 to 1,835 to 36, where the recent high was. But the longer we remain, that is, in this sort of pattern, then the risk could soon see a drop back to 1,786 and reassess from there. Wrap it up with Oil market is a little bit weaker today and actually backing away from those highs. Still, we're going to close underneath $70 a barrel to reinstate the downside, and if so, back towards the region of as low as $64 to $65 a barrel. But we need the confirmation under 70. Until then, the top side holds roughly around 72.70 to 74.40. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.